Hey guys, Donnie here, and welcome to another episode of Stocks for Stoners. Thanks for coming back, or thanks for tuning in for the first time. Either way, please hit that like button, subscribe, and tell everybody about me. The ideas behind these videos, if you're new here, are to help you learn about the stock market and not be so confused, I guess. I know when I first started getting into the stock market, a lot of these things were very confusing to me, and it really kind of kept me from investing further in the beginning than I would have. I know and understand a lot more things now, so I tend to put a lot more money into the stock market because it's not so difficult for me to understand. So again, I'm coming back to you with trying to help you understand these things so that you can invest in the stock market and feel more confident when you're making your buys and sells, because then you'll understand what you're reading and what you're doing. So here in episode 4, I'm going to start talking about advanced order types. So you can think of this episode as a part 1 to the upcoming videos that I'll be doing next Sunday and the future weeks ahead. This video I'm going to talk about stop orders, stop limit orders, and please forgive me for looking at my notes. In the future, I'll be editing my videos so that when I'm looking down at my notes to tell you about these things and make sure my thoughts stay focused, I'll be putting those things up here on the video for you, just so it's a little more professional in the future. For now, if you'll please bear with me, I'd really appreciate it. So like I said, we're going to talk about stop orders, stop limit orders. They're pretty easy to understand. At first, when I first started learning about these things, I was actually really confused until I started putting it into a way that I would understand. And as soon as I did, it clicked. So I hope I can do that for you. And well, let's get into it. A stop order, we'll start with that, is it works at a predetermined price. It's filled at market price, and if it doesn't reach that price, then your order isn't executed. It's not taken. So let me see if I can hopefully help you guys understand this. Let me look here real fast. Okay, so let's say the market price on gold rolling papers is $50 a paper. You see that there's potential in those gold rolling papers of becoming worth more than that. So you're not 100% sure about that, so you set a stop order for the rolling papers, for these gold rolling papers. You set that stop order for $55, because if they don't get to the value of $55, then you're really not going to be that interested in it, and you're going to move on to the next thing. Say that gets to $55 for the gold rolling papers, though, and you're interested, so it makes the buy for you, because, like I said, you set up the stop order. Well, the thing with the stop order is if the papers continue to rise in value over the $55 value that you set, well, the value is you're going to continue paying that increased value. So if you set your stop order for $55 on the gold rolling papers and the value gets to $55, your order starts to go through at the $55. Well, let's say you have an order for 1,000,000 gold rolling papers. Well, not all 1,000,000 of them is going to be filled at the $55 price if the price is continuing to rise up. So if the price after 100,000 of the gold rolling papers you got for $55, the next set you're going to get for like 56, and then maybe another 100,000 at 57. It's going to do that as the price rises on you. If the price comes back down, a little, it's going to still buy it at that market price because it's gotten above $55. So if it gets to 57, but then the price drops back down to 56, the next part of your order is going to be filled to 56. Just fills, like I said, it fills at market price. It doesn't have a limit anywhere, though. So even if the price went up to $70 a paper and you haven't filled your order yet, it's going to start paying $70 a paper until it fills your order. That also works for selling. You're concerned the market's going away for the papers, and you're holding on to them. You see the market price is declining, so you set a stop order to sell, which would be a sell stop, and you set that, say, at the $55. around where you originally, $55 what you originally paid for it to start with. You don't really want to lose too much, so you set it at $50 to $55 somewhere in there. So if the value goes down on the market to that $50 range, then it's going to trigger and sell your shares. And again, this triggers at market price. So if the price continues to drop below, say you set the price at $50 and the price continues to drop below $50 to 49 to 48 to 45 to 40, if your order hasn't been sold completely out yet, if you're just selling everything, it's going to continue selling at the lower prices. So it'll get to that $50 range, sell, a half a million at $50. The next quarter million gets sold at 48, then another quarter million, depending if you have like a ton of these papers or whatever, I'm saying, these gold rolling papers. So that's kind of how it works. And it works in both long trades and short trades. So if you're going to be doing a long trade, holding on to something for a long time, you can set the stop order to, because you want to be sure that the company's going to have value. So you can set your stop order on a long trade for whatever price you see coming in the future, and then hang on to the gold rolling papers, the stocks, whatever, for an amount of time that you want to hang on to them. Again, it works in short trades, and also that works in short trades with the sell stop, because now you can do the trade to where, okay, I want it at this price if it's going to raise up, but I want to make sure it's selling out if it gets down to this price. That's how it works in the short trade. So, and it also works in a long trade too, I guess. In a long trade, you're getting over that length of time that you've held on to it for, and I'm kind of tired of hanging on to this, but it's holding my value at this level. So if it starts to go down below this and it's keeping my value, it's going to drop my personal value, then I want to sell it. That's how that would work in a long trade. So now let's talk about the stop limit orders and how that works with a stop order. It's actually more useful to use a stop limit order because, well, that helps you to, control your profit and loss on your stocks or your gold rolling papers that I was talking about. If you're controlling your profits and losses, it helps you to keep your personal portfolio in a lot more controlled aspect, something that you are in more control of. If you don't want your value to completely dump to nothing, or you want to grab something before it gets way too high out of your price range, stuff like that. That's where these stop limits come into order or come into use for you. So let's say you're buying the gold rolling papers. Let me look at my notes here real quick so I'm not looking too stupid to you. It goes live at your predetermined price, but it won't execute above or below your stop limit orders. So let's say you're buying those gold rolling papers. Right now they're selling at $50, but you set your stop at 55. Okay, so the price gets to 55, but you don't want to pay more than $60 for each of those gold rolling papers, because then you think your profits you're going to start losing profits at that point. So you set your stop limit at $60. Your stop order is at 55, so it comes to 55. Okay, start buying at 55. Well, if it gets to 60 and it starts to go any higher, I don't want to pay more than 60. Stop buying stocks at $60. It'll fill your order from 55 to $60. It works the same with selling. I mean, that's pretty easy to understand, right? I hope so. If, again, any questions, please feel free to ask me below, and I will go into any detail you need me to go into. So like I said, this works the same for selling. Let's say you've bought the gold rolling papers. You bought them from between $55 to $60. You're hanging on to them, and now you want to sell them, but you don't want to make too much of a loss. Now let's say you see them going down in value and you don't want to lose too much of a loss. So you set your sell stop at $50. So that way, if they go down to $50, then it's going to trigger. It's going to start selling those off for you so you don't lose a lot of value. And if you really want to make sure you don't lose a lot of value and you don't mind being a bag holder for a little while, you set your sell stop limit to $40. So if it goes down to the $50 and you start to sell, off, the stuff, but it gets to that $40 and you're really starting to take a loss on it and you don't want to take any more of a loss and you could see potential in the future to get a little more of that value back, you'd set that stop limit at $40. It's going to stop selling your gold rolling papers, your shares, whatever at that point, and you're not going to lose any more money. Like I said, you're going to become a bag holder at that point. You're basically holding on to these shares, hoping that they go back up in value for you. so that you can sell them at a better price later on in the future. This also works with profits. So just so you know, so let's say that the price of those gold rolling papers, your shares, have gone up. You paid $55 to $60 for them, and now that price limit has gone up to $100 or more. Well, you want to make some money, so you set your sell stop order at $100. So once that price reaches $100, it starts selling your shares for you. Well, if the price is going up and you think, man, that really has potential to make me some more money, and you don't want to really lose out on those profits, you can set your stop limit of $110, $120, so that if it gets to that $110, $120, it stops selling your shares, your gold rolling papers, whatever, takes that and lets whatever you have left continue to gain in value, so that as the value goes up, you can earn more profit, right? And you're not selling everything off right away at less than what it's going to be worth. This also works for when you have gained profit and the value starts to go down. So let's say that you hit that $100, so you want to start selling it, but you don't want to lose any of those profits right away. You'll hold on to those a little longer, let it climb back up over $100 again. So you set your stop limit to $90, $95 below that $100 range, so that if it gets down to that, let's say you set it at $90 and you start selling at $100, but it drops back down to $90, it's going to stop selling. Oh, no, we don't want to lose too much of our profit, so we're going to stop selling until it goes back up to $100 or more, right? So that essentially is using your stop orders, your stop limits, in hopefully every aspect you can think of. Again, if you have any questions, feel free to ask below. I have no qualms with answering you. So, yeah, here we are. We're going over my 10-minute mark, guys. I don't want to keep this going any further, so we're going to stop here. Hopefully that fills in everything for you. You've figured this out. If you have any questions, like I said 100 times before, feel free to ask below. Please subscribe. Please hit the like button, share, comment, whatever. Just let me know you're watching. You guys have a great day.